Ladies and gentlemen, good day and welcome to the PG Electroplast Q2 FY24 earnings conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. During this call, the company may make certain forward-looking statements based on currently held beliefs of the management of the company, which are expressed in good faith and in management's opinion are reasonable. The forward-looking statements may involve risks, unknown risks, uncertainty, and other factors which may cause the actual results, financial condition, performance or achievements of the company or industry to differ materially from those in forward-looking statements. These forward-looking statements represent only the company's current intentions, beliefs or expectations, and any forward-looking statements speaks only as of the date of this call on which it was made. The company assumes no obligation to revise or update any forward-looking statements. I now hand the conference over to Mr. Deepak Agarwal from PhillipCapital India Private Limited. Thank you. Over to you, sir.
Thanks. Good afternoon all. On behalf of PhillipCapital India Private Limited, I welcome you all to PG Electroplast Limited Q2 FY24 earnings conference call. Today we have with us management represented by Mr. Vishal Gupta, Managing Director, Finance, and Mr. Pramod Gupta, Chief Financial Officer. Without taking much of time, I would like to hand over the floor to the management for their opening remarks, post which we open the floor for Q&A. Thanks, and over to you, sir.
Thank you, Deepak, and good afternoon, everyone. Thank you for sparing your valuable time and joining this call today. Hope all of you are doing well. I am joined on this call by Mr. Pramod Gupta, our Chief Financial Officer, and we have already shared our results presentation with you people, and hope you must have gone through that. Second quarter of this financial year has been another strong quarter for PG with good growth over FY23 numbers. Sales have grown by 40% and crossed 458 crore rupees, and EBITDA has increased by 47% and stands at around 40.86 crore rupees, and net profit rose 73% and stands at around 12.4 crore rupees. Product business crossed 173 crore rupees in Q2, with room AC business contributing 74 crore rupees, which is a 44% growth on YOY basis. The washing machine business also did 98 crores and grew around 10% on YOY basis. Electronics business, which includes our TV business also, stands at around 124 crore rupees and it grew at 153% on YOY basis. Order book for product business remains robust, and the company is on track to scale the product business significantly in this financial year. Our new product offerings in washing machines have received good response, and company is continuing its investment in new product platforms across different product segments. We are also focusing our efforts towards developing products which helps us in maintaining cost leadership and while striving for product leadership too at the same time. Company continues to see increased interest for business from its new and existing clients, and we remain very confident on the future growth prospects of our business. For FY24, we are retaining our guidance. Our sales guidance stands at least 2,800 crore rupees, which is a growth of 30% over FY23 numbers, and operating profit guidance of at least 210 crore rupees, which is a growth of 28% over FY23 operating profit of 164 crore rupees. The growth in product business, that is washing machines, room air conditioners and air coolers, is expected to be around 43% from 1341 crore rupees in FY23 to 1920 crore rupees in FY24. Capex guidance stands in the range of around 170 to 180 crore rupees for this financial year, and all Capex plans are on track. Our new RAC facility, which is coming up in Bhiwadi in Rajasthan, is on track, and we expect to start production by January 2024. In our super facility, we are expanding our PCB assembly facility for REC controller, and we are constructing a new 300,000 square feet building. Both we are expecting to be operational by January 2024. Our new facility for TV, which is under our JV, is also in the process of commissioning, and this also should be operational from the January 2024. With this now, I will hand over the call to my colleague, Mr. Pramod Gupta, our CFO, to elaborate on the financials.
Hello and good afternoon, everyone. I'm sure you've seen the financials in detail already. We had a solid second quarter in many aspects. The net sales for the quarter grew 40% YOY despite softening commodity prices, leading to lower average selling price of most products. Operating profit grew 87.8% to 35.97 crores, and net profit was up 73% at 12.39 crores during the quarter. We had a margin expansion due to low commodity price and operating leverage in the second quarter. On balance sheet side, we are now cash positive. We have utilized the QIP proceeds to repay the working capital debt. We have now a gross debt of 269 crores, while the cash and bank balance stands at 340 crores. Our operating cash flow in 1H was very strong at 207.5 crores. We are on track to control our working capital as promised, and in 2024, working capital optimization remains one of the major focus area for the company. Our focus on improving capital efficiency is bearing fruit now, and on a trailing 12-month basis, capital efficiency on business has improved. Company's ROE stands at 22.8%, and ROE, which is our average after taking the post capital raise money, stands at 15.7% for the trailing 12 months. Net fixed asset turns for the consolidated entity stands at 4.63x. Now with this, I would like to open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vipraw Srivastava from InCred Capital. Please go ahead.
Hi, am I audible?
Yes, you're audible.
Yeah, just want to understand that with various in-house capacities coming for the AC, so will it impact us in some way or the other? How do we stand there?
Well, I would like to say here, see, if so much of capacity and supply is coming in the system, obviously it is going to have some impact on almost all players, and obviously the competitive intensity has increased, and that is going to reflect in the increased seasonality, higher pricing pressure. But we think that given the cost leadership that we have, we should be able to sustain our margins at a healthy level, and we are optimistic that we will be able to have a good growth despite the so much capacity coming in the system.
Right. You talked about cost leadership. Can you in any way quantify how much percentage are we cheaper than the entire industry? I mean, is there a number to it, or if you can give me that?
No, I think it is very difficult because we are not privy to the competitive landscape cost structure. But from what the understanding we have in terms of margins and whatever the cost structure we have, we think we have a very competitive cost structure in the industry.
And in fact, I would like to what Pramod is saying, whenever our cost price negotiations are being done with the customers, on the basis of that, we have a feel that we have a comfortable pricing lead or costing lead as far as competition is concerned for RAC segment.
Right. Makes sense. Last question. So, in terms of AC, do we have any client concentration risk as such, or are we diversified, so there is no risk in that sense? So any thoughts on that?
Can you just repeat your question, please?
What I asked was, in the AC division, so do we have any client concentration risk, wherein we have exposure to one particular client is very high, or is it equally diversified?
See, last year, even while we were having just a second year of full operation, we serviced 14 clients or 14 brands. So that we are very well diversified. This year, I am sure the number of brands which we will service will be probably closer to 20. No doubt, there are a couple of top clients which we have a high dependence on, but nonetheless, given the fact that we are servicing almost 20 clients, the portfolio is very well balanced and very well diversified. And we remain optimistic and hopeful that the revenues will continue to see a good growth in the coming years.
20 clients in AC division, you were saying, or overall?
In AC division. And overall, we have more than 60 clients, 60 plus clients which we are servicing. In AC alone, I'm talking close to 20 clients, which I think we.
Okay, thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question is from the line of Kiyur from ICICI Prudential Life Insurance. Please go ahead.
Congratulations to the team for great results. The first question is on, I think similar to earlier participants, that in general brands are setting up facilities. I think two of the clients, Lloyd and Blue Star, which you have named earlier, they are adding capacity very aggressively, and few other people in the industry adding capacity. So the growth that you are envisaging is, despite the capacity addition, they are increasing volume, or new clients are getting added, which would more than offset such kind of existing clients who are having their own facility in near future. So we can answer this question and just give more idea about basically more client profile, how it is today and how it will be 2-3 years down the line. That would be helpful. That is first question.
Yes, there is a capacity coming in the system, and some of our clients are always also putting up their plants, and we do see some of them moving the business to their own plants rather than outsourcing from us. But we think there's an industry-wide growth which is there. Apart from that, we are deepening our relationship in some of the existing clients which are already large with us and becoming larger. Also, we are adding a very good set of new clients this year, and that will actually make up for more than make up for the business that we may lose because of the insourcing in some of the brands which you named.
Okay. You mentioned you are adding 2 clients. Did you mention 2 or few? I couldn't hear.
I said few more clients. Last year I said we had serviced 14. This year we expect to service close to 20 brands.
Okay. Understood. Second, just one of the private labels has cancelled their licensing agreement for one of the brands which they had licensed for, which is client for many of the EMS players. So are you seeing the impact of that? Just in case, just want to get your thoughts.
See, these things are always happening in this business. It's a very dynamic situation, and we keep our ears to the ground and closely watch this evolving situation, and we are able to tie up businesses with new brands also, new clients also, and the existing clients also by increasing our share of business with them. And that way, we are very confident that we'll be able to sustain the growth that we have always projected right now. We can't comment on individual cases, but yes, it is what you are saying is right. But at the same time, it's always a dynamic situation. Business is always evolving, and you have to always adapt to that.
Sure. And just last question, that is on the refrigerator side. I think you have earlier highlighted about plans to enter refrigerator business with some anchor client. Any update on that project?
So we are already working on the product benchmarking. We have already done the technical tie-up with the technology provider, but we are doing some cost benchmarking with the existing products in the market so that whenever we come out with the product, it has to be cost competitive to start with. So we are working on that. In maybe another month or 2 months' time, we will have something concrete to talk about that.
Okay. Thanks a lot and all the very best.
Thank you. Thank you, Dave.
Thank you. We have the next question from the line of Ashish Shah from JM Financial. Please go ahead.
Yeah, good afternoon, and thank you for the opportunity. So the first question is on the RAC business. So, you did talk about things getting a little tight on the competition side. So first, how is the growth outlook looking for the upcoming, season? You think that your channel inventories have come down and you're seeing a better season ahead, or do you think some of the pressures which have been there in the past may continue ahead as well? The second question is on the on the AC strategy. So while you said that there could be some insourcing now from some of your clients, do we see a scope where we can supply them some components, if not fully built units, and at least keep our revenue share intact to some extent? Yes, sir. Any clarity on this will help.
Yeah. So coming to the industry, I think despite the unseasonal rain, post May, June, April, May, June, the business has been pretty okay for most of the brands, at least with whom we are in touch with. And most of them have seen a good growth even in the latest month of October. In fact, people have started talking about probably getting to close to double-digit growth for the full financial year this year. And we hope that the months of January, February, March, which is typically the key month for the production, are good, because till now the business has been pretty good after the April, May, June month. That is on the industry. Now coming to your second question, whether we can actually supply the components, you have to appreciate one thing, that we have an integrated plant and most of the capacities are balanced even on the component side. But in some of the high-value components, we are in discussion with some of the customers where we can supply to them some of those components. But because the seasonality is same for them and us, and our plants are largely balanced, as of now, we do not have a huge spare capacity for supplying components. We are actually more focused on the product side of the business in the RAC side. But on the non-RAC side, where we will be having, we can utilize the same infrastructure for in the off-season side. We are looking at aggressively targeting that business so that we can actually minimize our losses in the off-season and make the good use of sweat our assets well in the off-season with the same this AC component facility.
Right. Fair enough. Sir, just a couple of more things. One, on our guidance, it seems that based on how we have done in the first half, if I imply the margin, it looks to be on the lesser side. So, you think there is a possibility of surpassing the EBITDA guidance, especially what you have given?
So I think, we have not actually changed the guidance. It's still the guidance which we gave in the beginning of the year, and it is at the operating margin level. Yes, we think that there could be an upside to the operating margin, and it will actually a lot depends on how the season plays out in the coming months. And we remain hopeful that margins should be better than what we have guided. That's why we say it is at least 210 crore. Hopefully, it should be better than that.
Right. And lastly, on the TV, electronic side of it, so there we did allude to the point that by January we'll be ready with the facility. But do we have any visibility on the orders that we can supply, on the kind of a volume outlook, if you can share? That will be helpful.
Yeah. So we see that by January, actually the off season for TV business starts typically. So it will be a low month from January till April, May, June. And in that period, we have some captive orders from our partner, which is going to be their country. And apart from that, some continuing off-season offers from the other brands whom we are servicing right now. But it will be, as I'm telling you, it will be an off-season for the first 5-6 months, which will help us to stabilize the facility and ramp it up in the coming season next year, which will start sometime in April, May, June period.
Got that, sir. Yeah, that's it from my side. I will come back if I have more. Thank you.
Thank you. The next question is from the line of Kaushik Mohan from Ashika Group. Please go ahead.
Hi, sir. Congratulations for the numbers. Sir, I just wanted to understand on the recent that we participated in laptop business, right? Any update on this specific side?
That PLI decision is still pending from the government side, and we are also awaiting the outcome for the PLI application, and we remain one of the applicants. We are just waiting as you are. So we don't have any new update on that.
Got it. Sir, how about if we see with the current capacity what we have, the total revenue for the company can reach out to be around 3,300 to 3,200 crores. So we have guided around 2,800 crores. So the next leg new growth will be coming from the recent capex that we have done in New Delhi, near to New Delhi, Rajasthan, and a couple of other new businesses. So, and new growth also will start from the laptop business as well as the refrigerator business, which will be again having some updates in next quarter. Is my understanding right, sir?
Yes, your understanding is right. I just want to highlight one thing here, that this almost 250-300 crore TV business capacity in the company which is there today will be probably going out of the company in the next financial year, and therefore you will have to adjust that take into account, because it is going to be a 50-50 joint venture, so it is not going to be line by line consolidation. Rather, only the profit share will get added in the company's balance sheet and in the bottom line in this JV.
Okay, bottom line or EBITDA level, sir, it will be added?
No, not at EBITDA level also. It will be only added at the bottom line.
Okay, so then we will be surpassing our margin expansion. Then we'll be having a margin expansion from this because of this reason.
Yeah, hopefully so, because TV is typically slightly lower margin, but at the same time it is also very small percentage on our overall turnover.
Okay. So what can be the total business that we can do in the TV side?
Today the capacity is close to about 300 crores, but this year we will be probably doing close to 220 to 30 crores kind of a turnover in the TV business.
Okay. Thanks, sir. I'll get back in the queue.
Thank you. The next question is from the line of Keyur from ICICI Prudential Life Insurance. Please go ahead.
Thanks for the opportunity. Just one follow-up. On the refrigerator side, the MNC client that you mentioned is having existing relationship with us, or it's totally a new relationship?
No, I have not mentioned any MNC or any name.
Okay.
We have added the new brands, few new brands. Like last year we were servicing 14. This year we hope to service about 20 brands. So all these things, plus some of the existing relationships which we have, we are seeing increase in our share of business.
No,
right?
I was just talking about refrigerator. So I think you have mentioned that there will be some anchor client. MNC are not.
Talk about any clients as of yet. In refrigerator, it's still too early to actually talk about a client or anything, because that business is still on the drawing board level, and we are still evaluating the cost structures and how to become competitive there. We are yet to take a call and of how to and where to put the plant and how to go about it.
So we are doing it on our own and then we search for the client, or there has been demand from existing relationships to diversify into ref, and we are venturing into ref. Basically, the starting point of the thought process and how do you want to take it forward?
So we are looking at both the possibilities. In fact, we have a lot of soft commitments from our customers, but at the same time, this business is always about quality, cost, and delivery. So we are doing internal evaluation about the possible platforms which we have to develop and launch for the refrigerator, the location of that plant, because geographical location is also very important because it's a bulky product. So lot of things considered right now. And as I told you earlier, we give us another 6 to 8 weeks for us to take any, firm call on this, how to go about this refrigerator project.
Sure. And just one clarification on the laptop side. There are multiple categories for these PLIs available for the fully built product as well as components. So any specific part of the product for which we have applied for PLI?
Sir, we have applied, but we will not like to disclose the category where we have applied for right now. I don't think that will be right to disclose that category where we have applied in that IT PLI.
Sure, no worries. Thanks a lot. Thank you. I'm happy to tell you.
Thank you. We have the next question from the line of Arafat from InCred Capital. Please go ahead.
Yeah, hi sir. Thanks for taking my question and congrats on good set numbers. So my first question on debt. If you look at the quarter, the debt has the interest has jumped 37% despite lower debt. So any thought on that?
Actually, the QIP actually got over on 5th of September, and we were able to utilize money after all the conditions only post 10th of September. So, therefore, the full impact of this reduction in the debt is not yet visible in this quarter. It is going to be visible in the coming quarter.
Sure. Sir, let's just want to understand how the competitive intensity has changed in past 2 years. I believe a lot of new players again coming, especially on the brand in sourcing. And again, despite that, you posted very strong numbers in past 2 years. So any thought on that?
So I'm saying like we are still in the growth phase. We think that the opportunities are there, and we are increasing the number of customers and also increasing the share of business in the existing relationship, which is helping us to counter some of the pressures which are there, which you mentioned, basically about the increased insourcing, etc. Also, I want to highlight here, we are still a smaller company in the overall scheme of things, in the sense the overall industry is very large and it's growing. It's likely to grow much larger in the coming years. So we think that the growth opportunity is there for us, and it is pretty large and big in the coming years. Although I do agree that in next 1-2 years there will be a little bit of a pressure because of the capacities which are there, but we are taking adequate response by adding new customers and increasing our share.
Fine. So just a last question. Let's say beside your RAC, washing machine, TV and ref, are there any other products you would like to enter over the next few years?
Right now, we do not have anything. The product which you talked about on the drawing board, we are looking at some of these things, and we have applied for the hardware PLI 2.0, where we are looking to participate in the hardware PLI. If we get it, then we will be putting up a capacity for that.
Fine, sir. That's it from us. Thank you, sir.
Thank you. We have the next question from the line of Apurva Singh from Pancharatna Investment. Please go ahead.
Hello, sir. Just wanted to ask about any systemic issues which were identified because for the reason of the fire, or was it just a freak accident? And the second question is, wanted to understand a couple of top 2-3 things which you are working on in terms of identifying your top challenges of the company currently. I wanted to understand a little more abstract view of what you are working on as a company.
So this fire was actually a very freak accident. This was a small godown which we had taken for keeping some of our finished goods, and in the nearby facility there was a company, FMCG company, which had a small godown where they were keeping their chemicals, which is almost 30 feet away from our facility. But in the night this fire happened, the fire started in the godown of that FMCG company, and then although our people were very sure that nothing will happen at our place, and they had pushed a lot of our material inside and almost 30 feet away from the fireplace, but then the blast happened in one of the tin, or I'll say one of the containers, which actually led to fire expanding into our godown. So that is the way the fire happened. And then once the fire came, because it was a finished good which was already packed into carton boxes and also the thermocol, etc., the fire was actually uncontrollable. Therefore, it was not in our hand, or it has nothing to do with our facilities actually. That is on the fire side. Now coming to a couple of priorities that are there in our business as of now. Obviously, growth is something which we are looking at, and we are looking at expanding our capacities, capabilities, new products, R&D, and we are focusing in the existing business in these segments. Obviously, second and the very important point that we are driving right now in the business is the capital efficiency, and we have a focus on improving our asset turns as well as the working capital efficiency. So these two things that present remain the big focus area for the management.
Thanks a lot. Thanks a lot. So the reason for me asking the question was wanting to understand how can we avoid the situations further. But I think I got the answer. It was a freak accident. So thanks a lot. That is it from my side.
Thank you. Participants who wish to ask questions may please press star and 1. The next question is from the line of Nikhil Gada from Abacus Asset Management. Please go ahead.
Hi. Thanks for the opportunity and congrats on a great set of numbers. So my first question is regarding the scenario where the brands are doing insourcing. You mentioned that you have a decent cost structure, but do you think there can be some impact on our current margin run rate that we are making in air conditioners? Do we have to compromise on some of our margins to ensure that we get the volumes?
That is a possibility if the situation becomes dire in the sense that the market is bad and the volumes really, the growth in the industry is not there, then obviously the competitive intensity can be high and that could lead to margin pressure. One of the important things to realize here is that, most of the companies which are participating and coming up with the capacity are also the participants in the PLI scheme.
Correct.
And most of the people in the industry have actually applied both the customer side as well as our competition and some of the vendors on the PLI side, and the targets are quite steep for everyone. So I do foresee a situation if there is a very bad situation in terms of volume growth, etc., then the competitive intensity can lead to pricing pressure and margin pressure.
Understood. So my next two questions are more, data related. Specifically, when you mentioned this 19-20 crores of product business in FY24, is it possible to give a breakup between air conditioners and washing machines and the remaining TVs and coolers?
So TV is not part of the product business. That is a part of the electronic business. Typically, out of that, this number almost close to 50 crores will be probably the AC business. 280-300 crores range will be the washing machine, and rest will be the cooler.
Okay. And fair to assume that ACs would be in the band of 7-8% margins, whereas washers would be 9-10%, right?
Yeah, that's a fair assumption.
Got it, sir. And just the last question, this 170-180 crores of capex announcement, can you break it up for us? How much would be for the Rajasthan part, how much for the PCB assembly, and how much for the building?
Yeah. So out of this 170-180 crores, almost 85 to 90 crores is going in the new facility in the Bhiwadi, where we have put up the plant, and it is going to be ready by January. 40 to 45 crores will be for the new building which we are building, which is getting commissioned here in Supa. It is going to be over 300,000 square feet building, and construction is going on. In January, we hope by January end that should be also ready. About 15 to 20 crore will go in the PCB facility which we are going to put up, and rest of the other capex is actually summation of capex in the washing machine business and some of the maintenance capex.
Got it, sir. Thank you for answering all my questions, and all the best.
Thank you. The next question is from the line of Pranay Chatterjee from Burman Capital Management. Please go ahead.
Good afternoon to all. Am I audible?
Yes, sir. Very much audible.
So my first question is around the various incentives. Actually, two incentives. One is the state incentive, and other is the RAC PLI incentive. So if you can give us, tell us, number one, did you record any incentives in this quarter, in Q2, number one? And number two, how do you expect the state incentive and the RAC PLI to come in over the next 2 to 3 quarters? Like, when do you expect to record that?
So coming to the incentive, this quarter there was only one small state incentive of 1.5 crores or so, which was recorded. There was nothing else apart from that in this quarter. The PLI, Government of India has just opened the website, and they are inviting for the applications for the claim, which we will be filling. And hopefully, if the claim is accepted and government disperses, then in the next 2 quarters, we hope to book the PLI for the last year. That is going to be this year's incentive, which is going to be there. And for the next 2 quarters, 1.5 crore state incentive will continue.
The PLI should be 15 crore, right?
Yeah, it will be 15 crores for this last financial year, which we will be booking this year. The bigger state incentive which we will have will be coming in the next financial year.
Understood. Sir, and on the plastic molding side, I noticed the growth has been slightly volatile. This quarter we saw a 20% YY. Could you just help us understand what is driving the growth or the degrowth in this segment, and what is the outlook for, let's say, the next 2 years? Can we clock 15-20% growth here, or it's more of a normalized 10% that we should expect?
See, typically, this business, the raw material is a pass-through, and the price of the plastic actually dropped quite sharply in the first quarter, so there was hardly any growth in the first quarter. In fact, there was a decline in the first quarter. In the second quarter, there has been some growth in the plastic business, but I don't think it is 20%. I'll just check and give it to you. Just a minute. Just give me a second. And the volumes have been going up by about 10-12%, but the basic problem is because the price correction in the commodities this year, most of the businesses we have seen decline in the prices. So in the value. Sorry.
Got it, sir. And regarding volumes, can you just give me the IDU, ODU volume and also the washing machine volume for this quarter?
Can I give you this offhand? I don't have this right now with me. And let's come. Yeah. So the plastic business actually had a growth of about 16% this quarter. Yeah.
Got it, sir. No problem. Thanks, and all the best.
Thank you.
Thank you. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Hi, sir. Good afternoon. So my first question is, on the margin outlook. So, historically, we have maintained that given we have been a single location company, that has been a big positive for us from a cost management point of view. So how do you see margins progressing for us, especially in light of the new capacity and all that we're putting up? And also, are we seeing any pricing pressure already in our discussions with customers? We should be discussing fiscal 25, I believe, already in terms of the volume and also. Are we seeing any pricing pressure on that?
Yes, you're right. There is a discussion which has started already for the next season, which actually covers the fourth quarter of financial year 24 and first quarter of 25. Yes, this year pricing pressure is there, and because of the fact that some of the customers have taken some of their basically volumes in the insourcing side, so because of which there is a desperation among the competition and the vendors to actually gain the business. So we are seeing pricing pressure. But as I said, we are working to contain the margins by having the operating leverage and having the cost competitiveness and increasing further cost levers which we can drive in different areas. We remain hopeful that we should be able to sustain good margins in the coming season.
And sir, also the impact of the Rajasthan facility, and also can you tell me the size of that plant in terms of capacity and all?
So that capacity initially is a smallish capacity in the sense that this is going to have a 0.6 million RAC capacity. Basically, we are. It is some of the costs has already been has started and it has impacted the last quarter because the major, I say, recruitment for most of the managerial team and supervisory team has already been done, and it has come in the last quarter. There will be initially some pressure. We do expect because it takes time to ramp up the facility, and from January onward, we will see the full ramp up of that facility. But we hope that that facility on a standalone basis will have a good profitability.
Okay. So just one clarification. This when we say 0.6 million RAC, we are defining this in ODU terms or in the ODU plus IDU?
It also has a capacity. This facility also has a capacity for window AC. So window plus the split both put together is 0.6. So window is about 0.3, and also split AC is also 0.3.
Got it, sir. Thank you so much.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Balamurali Krishna Janalagat from Oman Investment Advisors. Please go ahead.
Hi, good afternoon, sir. So regarding, I want to have an update on this TV business also. We have a joint venture. So what is the status of this and when we can expect this to commission?
So factory is under commissioning. We hope to start the commercial production from January in that business.
And what could be the margin profile and the capacity on the TV?
Initial capacity is about 1.2 million TV sets per year, and the margins will be probably in the range of about 1.5% to 2% at the net level in that business.
Okay, and regarding the Rajasthan facility, so we will start production from the January onwards. So when we can see that it is achieving that optimum utilization level?
See, once we are able to ramp up the facility from January onwards, so by this year, I am not very sure that we'll be able to have a very optimal utilization. But by the season of 2025, we are very confident that we will be able to have an optimal utilization of that plant.
Okay, that's all. Thank you. Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. We have the next question from the line of Pranay Chatterjee from Burman Capital Management. Please go ahead.
Hello again, sir. You mentioned in your capex of the AC plant, I think half of it is for windows, which comes up around 3 lakh units. How large is the industry size? So the overall 8.5-9 million RAC size, what proportion would be window ACs, and what would be the capacity share that you are creating as a percentage of, let's say, total industry size or total outsourced window AC industry size?
As per the estimates what we have with the industry size for window AC should be anywhere between 12 to 15% of the total market. That happens in the case of window ACs, barring one or two brands, most of the brands do outsourcing, 100% outsourcing of window ACs from contract manufacturers. So we have been always seeing as a good opportunity for ourselves to widen and give all the possible products to our customers. That is why we have come up with this facility. But at the same time, initially this year we are planning to do window ACs and IDUs from that facility in Bhiwadi. But ultimately we will be making complete split ACs also from that facility. Once this season is over and we are able to understand the capability of how our team has executed the business in that season, we will be adding more SKUs to that plant.
Sir, understood. So actually what I was looking for seems like this 3 lakh capacity for window ACs is actually a substantial share of industry size. So I wanted to check, is it backed on some new client signing or some visibility you have from some of your existing window AC clients? Because it's a material part of the overall sector.
See, what happens when you create a capacity is on an annual basis. But when you do it on a monthly basis and you are not able to achieve that sales in the off-season also, or the capacity utilization in the off-season. So whatever capacity we have told you is on annual basis, but we are hopeful of using that. See, this is first year. Please understand, I have to establish myself as a credible supplier for window ACs. We have been able to do that for split ACs, but we have to do that for window ACs. Once we take this initial step and we are successful in that, only then I will be able to give you any real numbers with confidence what is going to happen next year on this.
Got it, sir. And the outsourced, given Sir mentioned that most of this sector is outsourced, should we expect the outsourced player concentration to be similar to that on the split AC side, like top 3-4 guys take up most of the outsourced side?
You can say like that. Sir. Yeah.
Got it, sir. Oh, thanks a lot.
Yeah.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Sir, can you just share the current customer concentration number of, let's say, top 3 or 5 players within our AC revenue? Without the names, obviously.
Yeah, so the top customer will be probably close to 15 to 17%, and the top 5 customers will be probably close to 60%.
Of AC revenue?
Yes, of the AC revenue.
Okay. And sir, secondly, just to understand the impact of the TV joint venture better, so next year your revenues and everything goes out of the P&L of the TV related revenues, and all of that comes as a single line within your within the P&L. Is that the way it will look? The P&L?
Yeah, it will be like this, that there will be a share of profit which will come below the profit line, and it will get income added to the profit and become the net income for the full consolidated entity. But the top line and whatever EBITDA, etc. is there, it will go out. But on the net, it will be still positive because we have a very small scale in this business, and we hope that in the very first year we will be actually at least doubling, more than doubling the business in the TV business from what we are doing right now in the standalone entity or the company.
Okay. And electronics is all TV, I guess.
No. Electronics, we also do PCB assembly for TV motherboards, and we also do controller assembly for the controllers of AC. So that business is going to continue in the parent PG Electroplast and PG Technoplast also.
Okay, got it. Thank you so much.
Thank you.
Thank you. Participants, you may press star and 1 if you wish to join the question queue. We have the next question from the line of Bala Murali Krishna Janalagat from Oman Investment Advisors. Please go ahead.
Thanks for the follow-up. I'd like to have an update on the PLI benefits. We're expecting around 30 crores to be accounted in the Q3 or Q4. Could you please update on that?
So the PLI that we are supposed to get is for the last year. The government has finalized and issued the guidelines recently and how to claim and how to calculate the benefit, etc. So with that benefit calculation, etc., we are likely to file for the claim in the next 20 days, 20 to 30 days, and post that it will be hopefully disbursed within this financial year. So we will then, once the application is accepted and claim is accepted by the government, we will recognize it in our books in the coming 2 quarters.
Okay, thank you, sir. That's all.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1 at this time. The next question is from the line of Bhavani Shankar Kumawat from Phillip Capital India Private Limited. Please go ahead.
Yeah, am I audible?
Yes, you are audible, sir.
Yeah, thank you so much for the opportunity, sir. Just wanted to some data-driven question. So is it possible to share the volume number in the washing machine and the current utilization along with capacity you have currently?
These numbers I'll give you offline. You can call me later and I'll give you. The capacity utilization is probably close to about 60% as of now.
And is there any new addition of the clients we have done in washing machines, sir?
Yeah, so this year we did a couple of large names in washing machine. We are servicing almost 25 brands as of now in washing machine, and some of the largest brands in washing machine in India are clients.
Okay. Thank you. One more last question. So any new product addition plan over the next 2 to 3 years we are doing?
Yeah, we are evaluating some of the products, including refrigerator, and they are on drawing board. We are looking at how to have a cost competitiveness in them and how to have a good, benchmarking with, we are doing some benchmarking studies with some of the competition as well as some of the clients, so both the cost structure as well as the capital efficiency. So once that exercise is over, we'll take a call whether we need to put the plant and where do we need to put the plant.
Okay. Sir, if you have any sense on that, how much new addition of RAC capacities are being coming in India, or any brands are setting up the capacity? So if you have this number, if you can give me, it will be helpful for me.
No, this number we will not have. We are not privy to all the companies which are putting up the capacity in India, and we do not have their plans.
Okay. Lastly, on the capex plan, so for FY25, how much capex we are planning, sir?
That number we will probably be sharing with you in the March quarter result. We have not yet finalized about the new products and what kind of capacity additions we will do in the coming year in the existing lines. That exercise we will be starting after the December quarter.
Okay. Thank you so much for this, sir.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. we have no further questions, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
I'd like to thank all of the participants for the call, for joining the call, and thank you and wishing you all a very happy Diwali. Thank you.
Thank you. On behalf of PhillipCapital India Private Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.